Good morning, guys. I hope you're doing well, and welcome to today's edition of London Session Open. Today is March 4th, 2019, and it's 9:35 a.m. in London. We're going to take a look at the markets as we usually do. There's some interesting things happening. Chinese stock markets are up quite a bit. S&P 500 as well is up, and this is all on the idea that we're going to have or rumors really, and the comments in a Wall Street Journal article that we're going to have a trade deal between US and China and potentially removing any tariffs that have so far been implemented by the US. So we're going to take a look at that, how that influences the markets. But before we do that, as always, let's just spend a few seconds on the risk disclaimer. Okay, so let's begin here. And I can see that there's a good amount of people here today. We have Sahid, Vincenzo, Rich Bell, RG, Keith, John Mitchell, John, and Joanne, and Dan. And that's going to be difficult here for me. Taufik as well. So, guys, thanks so much for joining me this morning. I hope you had a good weekend. And yeah, let's kick off. I'm happy to see so many of you guys here. If you do have any questions, just put them in the chat box. And if there's any issues as well, just let me know. As soon as I've finished the main part here of the presentation, you're most welcome to ask any questions you may have about the markets. Okay, so let's kick off with the euro. That's going to be an easy one because you see the market is still trading sideways between 112.12 and 115.67. And until the market breaks away from this range, as long as we're trapped here, there's not too much we can do about it. Nobody really knows if we should be trading up or down. But I guess if the world economy bounces, as stock markets are not predicting, and if economic growth in the US picks up, we might maybe see some rate hikes. But when is that going to happen? Maybe in 6 months from now or something like that. I think that remains possible. But looking at the price right now, looking at the charts, the market is not pricing that in right now. We remain trapped within the range, and we need to take out the low for it to become interesting to trade this market. Here's the GBP versus the USD. And on Friday, I said that people probably going to try to buy around 132, which they did. The market even slid as low as 131.71 before bottoming out. And today is just gapped higher. And I think, as long as you trade above 131.40, that most likely the big head and shoulders pattern that we're working with here will be in effect, and we could probably continue to trade to the upside. So any sort of revisits to the 132 level to close the gap here will probably be met by buyers. That's what I think. And they're going to try to lift the price upwards. What's going on here is that people are pricing out a no-deal Brexit. And sort of, yeah, that's really what they're pricing out. That's really what the market was afraid of. No one really knows exactly what's going to happen. But I think, yeah, starting from Tuesday next week, there's going to be 3 different votes over 3 days. On March 12th, Theresa May is going to present her deal. If that gets rejected, on Wednesday, they're going to vote on if they want to go ahead with a hard Brexit, like a no-deal Brexit. And then they're going to continue on Thursday, 14th, to vote if they want to allow for a bit of an extension, as more time really to negotiate a new deal. So that's sort of what's happening next week, and that's probably going to influence the markets. And again, really what the market is telling us right now, that they're pricing out a hard Brexit. It's possible to trade euro pound as well. I think that is actually a better pair, which I found much better. Like the pattern here is very, very straightforward. I like straightforward patterns. There's no uncertainty what to do. Now this is your weekly chart, and you can clearly see how the price was trapped between the 2018 low and the 2018 high. So this is a nice sort of rectangle pattern. If it's not a rectangle, you at least have 3 bottoms, so definitely a rectangle. And usually when you break like a range like this, you'll get the actual range back in return. So here you're looking at 480 pip range. Put that on the breakup point, and then it does suggest that we could probably trade as low as 81.39, and then it's all about the residual ratios, right? Let me actually see if I can load a different price feed. I think it's this one. Let's stick with this one here. So what I said, and I put that in an article as well, that I said the break here would open up for further declines, and I said the initial stop loss is probably placed at 86.72, and then I actually lower this tiny bit to 53. We revisit the breakout point, but this was a good opportunity to short sell here, and then we're having that push to the downside. The way this is looking right now, it's possible to take this stop loss, put it just above the high here from Friday, and you would have literally almost reduced all your risk. Obviously, the problem with trading in a GBP pair is if something happens over a weekend and the market gets really nervous, and then you have a gap, and the market would gap above your stop level. That's the biggest issue. But the way this is looking right now, it's possible to reduce the trend defining level to pretty much the high. In other words, reduce the stop loss that much, and then you're literally almost looking at a risk-free position. And as from like sort of a risk-reward ratio on trading this, we said probably down here somewhere, look to short sell. So you're looking at an initial risk-reward ratio. So we're looking at pretty much a 4.35, but this cannot be lowered. So you're looking at a 14 times risk-reward ratio. So that is something that these are the sort of setups and that I like to trade. Now, this is the dollar versus the Japanese yen, and we had a very nice move here, as you might remember. We were looking at this for the market to bottom out here, which it did, and we're now at the levels where I think it makes sense to book profits. I would book at least 50%, if not 100%, and then look for some sort of pullback. If one likes to buy up here, you need to take into account that you will be buying about 156 pips away from support and about 167 pips away from next major resistance level. So you're looking here at the one-to-one trade at best. So that's obviously not a good risk-reward ratio. On the other hand, if you would have a pullback and look to get involved around 111.22, well, if we head back just to the high, you get your one-to-one. But if we actually trade all the way up to the levels up here, then you'll be looking at a potential reward of about 2.5 times. So that's a much better reward ratio and something I would do if I was trading this pair. In regards to gold prices, now all good things come to an end. And you might remember I was pretty much bullish from pretty much down here, tracked that all the way up, and then the idea last week was to buy somewhere here. Now, as you can see, the market tumbled and took out the lows here from February. This is February 6th low, and this is February 14th low. Took those level out. Most likely, we're going to move back to 1,275. And if you look at this from a weekly time frame, it looks like we totally got rejected up here. We are moving away from this level, and it looks like we're going to probably go down to 1240, maybe a little bit lower eventually, I guess. And then we'll figure out, the market will figure out if it wants to trade upwards or lower. For now, this is a bearish market, and I wouldn't necessarily go short immediately, but if it goes up to 1,300, 1,315, I suspect traders might potentially sell here, and then might go a little bit lower. Crude oil prices trading sideways between 54.94 and 57.89, and this is settled into a little range here. If I would trade here, if I would do anything here, I would probably wait for a break to 57.89, take out that level, and then we can probably go to 60.90. So that's what I will look at as well. If you look at it from a sort of trend-wise here, we're definitely trade drifting upwards. So break here, probably trade upwards here as well. So it makes sense. Here is the S&P 500, and the S&P 500 remains bullish about 2763.5. And we talked about buying here, right? It didn't look that good at one point, but the market rallied, and we actually just reached those levels where I said people are probably gonna look to buy, right? Oh, sorry, book profits. So we went all the way up here, and this is a good little spot to potentially book a profit if you want to. Now, given the situation with the sort of upbeat risk appetite, Chinese stock markets going upwards, and sort of the financial markets pricing out a hard, sorry, not hard, but like some sort of a global recession. Maybe we'll take out the high. If we take out this level, which is 2821.6, I think we can trade to the next level, which is probably something like 2891, followed by something like 2940. Any sort of dips here, I think people are going to buy them. And I do think that most likely, you can see the market gapped upwards here. It's quite likely we're going to go down and sort of trade to maybe 2806, 28, before the market sort of decides to turn bullish again. It's rather typical that the futures market, which this is based on, sort of moves ahead, and then there's a sort of the futures market catches up with the cash market, which closed here. So I'm reducing the trend funding level a tiny bit, and just making some adjustments here. I think 2,800. I think that would be fine, and then like that. DAX looking good as well. As you might remember, we said you have this head and shoulders pattern, head, left, right shoulder, and we said break to the upside is probably going to lift things to 11,692. We just reached those levels, so this is a good little spot to book profits if you want to. We're obviously going down a bit, and I think much like the S&P, we can have a bit of a correction, and but as long as should above 11,392. I see no reason why we should not be able to trade upwards. Shouldn't forget that we're dealing with a massive head and shoulders here on the 6 hour. Head, left, right shoulder. The break point happened here. So we're targeting 12,618. Maybe up to 12,476. I think that would make perfect sense. We just need to get rid of that hurdle over here. And I think that's pretty much it. I think the only thing we didn't cover is Bitcoin. This is a Bitcoin chart, and we're stuck within this triangle, right? We had that breakout. The market failed up here. This is one of the big reasons why I don't trade normal triangles like that. Anything that just have two sloping trend lines, I try to avoid them. I always like to trade things with a horizontal support or resistance. And we technically just within this triangle, and I think we can just do like this if we want to. So it continues to be within a triangle. The only thing that's changed now is that we have this more slightly aggressive target like that. If we have that break, let me actually change this. Let's do it like this. And like that. And then I think the bearish break is pretty much the same. Actually, no, take that back. So this is a 25% decline. Because this is so volatile, I like to go with percentage changes. So here, it's a 25% drop. Here, a 25% drop. I wouldn't go for the dollar value, which is 1,076, because it doesn't always make sense. On the upside, though, it's fine to sort of go with the dollar value. So you see here is $176. This is about 178.68. So it's pretty much the same. Here, I think the key to trade this successfully is to incorporate horizontal support and resistance. You have a high here, which happens to be pretty much where this high is as well. So if you break that, you in essence take out that double top. Here you take out that low, and that's when things become interesting. So really, the levels you're looking at it is 3,326 and 4,202, and that's pretty much it. Guys, do you have any questions? Please let me know. So we have Vincenzo here. I'm guessing you're a bit of a analyst yourself, maybe. Well, definitely a trader, I would guess. If you guys have any questions, just put them in the chat box. There are some comments here by Vincenzo, GBP in a clear uptrend on Heiken and Ashi charts. Yeah, Heiken Ashi charts is a good little thing to use if you like that. I don't know if you heard about this, but it's like a filtering on the actual pricing. The charts become like this. You can see we're an uptrend and here an uptrend as well. It's possible to do so, but I think that the formula is correct. It uses 2 days of data, and that means that it's like a smoothed candlestick chart. So the problem sometimes if you use 2-day, like a smoothing, using data from 2 days, you will get a delayed signal. Now the idea with the delayed signal is that you will stick with the trend for longer, and so you will avoid like short-term random moves. The problem is though that when you get stopped out, you will get stopped out. Maybe you should have taken the loss maybe 1 day earlier, right? I think at the end of the day, sort of using a system sort of depends more on your personality, what you like. All systems are good and bad. I guess the benefit is that maybe it will keep you in position for longer. And at the same time, again, sort of it'll keep you in position for longer. You avoid the random stuff, but when you really need to get out, you will be stopped out probably a bit too late. So there's no just both good and bads with this. And again, sort of depends on the system that you like, what you like to do. There are definitely problems using just normal candlesticks, which I do. To overcome any major sort of problems or to help alleviate for that, what I like to do is that when I'm trading a GBP pair, I look at GBPUSD, and then I look maybe at Euro Pound, and then I look maybe at other GBP pairs like GBP Aussie Dollar. So I use the correlations and the news, but usually the correlation is more important. So if I see that the GBP is losing out against many different pairs, and I see reversal signs across all of them, then that will be a strong signal to get out. At the same time, if I see a strong signal to get involved and buy, then I would take that. That would be a better signal if everything else is sort of doing the same thing. Okay, I think we're gonna wrap things up. If you guys have any questions, you're most welcome to reach out to me via Twitter at AlexFX00, as well as you can probably see in that little chat box, you have my contact details, alejandro.zambrano@atfx.com. And think about it as well. If you are ever thought about changing broker, then you should definitely check out atfx.com. The reason for this is that I did a little bit of an analysis here, just to give you an idea of some of the good things with ATFX. Look here, this is the euro versus the USD, and I just did a little comparison. It's not the most scientific way, but I accessed a real account with IG, a real account with CMC, and real account with FXCM, and so on and so on. And in the euro dollar, IG has a tighter spread at 0.6, followed by ATFX at 0.7. And then you have GBPUSD, where ATFX actually beats IG and CMC. We're pretty much at the same level, and definitely beats FXCM. And then you have Aussie dollar, where IG is at 0.6 and ATFX at 0.8. And then you have GBP yen, where ATFX is at 1.6 and IG is at 2.5. In fact, most brokers, what they do is that because most people just like euro, that's the first thing they look at. They will offer you tight spreads on the euro and in the GBP. Now, ATFX already beats people there. And then what the brokers do is that for anything exotic like GBP yen, GBP Aussie dollar, they just widen the spreads. And because you don't trade them that often, you don't think so much about it. But those trades you do in different pairs, exotic pairs, will add up. And the cool thing with ATFX is that they don't widen the spreads on these other markets as much as everybody else does. So you can actually have some very decent savings here. Now, to have access to these spreads, it's not enough to have a normal account with ATFX. Rather, you need to have what we call the standard edge. And the standard edge account, you can get that for as low as 5,000 USD. But if you come directly to me, then I have spoken with the head of sales, and you can get in for the equivalent of 5,000. So the equivalent of 5,000 in well, euro dollar and euros, that's like 4,000 something, and the equivalent in GBP is 3,500 or so. So you can get in and get those tight spreads for slightly less. If you want to have the same spreads with FXCM, to give you an example, you need to have about 25,000 in your account. Also, something that is new here that we're going to launch is that for anybody that actually does sign up to an Edge account, you get access to 2 30-minute sessions with me. These are coaching sessions, just one-to-one, you and me, and we're going to use a similar software what we're using right now, where you can share your screen and I can share my screen. And the first half an hour is just to try to understand what you want to accomplish, like what sort of when do you have time to trade, what sort of risk you want to take, and so just get a bit of understanding what you want to do. And then I try to investigate and see if I can help you. So if people that already have a strategy, I can help with things like where to put stop loss orders, money management. And people that don't have strategies, I will try to sort of pinpoint you into what I think makes sense, maybe send you a few links and so on, so you can better get up and running with a new strategy and hopefully be able to trade better than you're doing today. And this is actually all for free as long as you have that Edge account. So if you set up an Edge account, you get access to that service. Thank you so much, Vincenzo. Yes, if you have it, Vincenzo's saying here, fairly competitive spreads, I'll check out the website. Yeah, definitely, you should check it out. They are, ATFX, they're aware that they're new, right? So they're doing these sort of deals here to raise interest and awareness, and they're going to remain like this. And to give you a little bit of background, the global CEO of ATFX is a guy that used to work for FXCM Hong Kong for many years. And hopefully that could give you a better understanding of what sort of company it is. Obviously, we're taking the best parts of FXCM and not the worst parts. So it's a very well-run company, ATFX. They have a huge presence in Asia. And we're setting up here in London. We're about 20 guys right now, but about a year ago, it was just 4 people here at ATFX. Okay, gonna wrap things up, guys. You have my contact details, you have my Twitter as well, and you even have my WhatsApp if you want to reach out to me. Have a good day, guys, and I'll see you guys tomorrow, same time here at atfx.com. Thank you.